Good morning, ladies and gents. Welcome to another video brought to you by Total Control Traders. Hey, by the way, a quick tip for you guys here. Seems like the video automatically starts as 720p, but there is the option to switch to 1080p, which should help you view the charts a little bit better. Huh, that's interesting. Depending on what device you're on, seems like some of them starts as a lower quality. But anyways, yeah, make sure change it to 1080p. Just a little bit better on chart viewing and whatnot. Down to the nitty gritties. Just gonna make sure the volume's working here. Just gonna make sure the volume's working here. Alright, seems to be working fine. Alright, let's get right into it. First one, SPX. Same as usual. So key trend line. Remember, this is the key trend line we're looking at. 1, 2, 3, 4, 5, multiple bounces, and with immediate back test rejection before a reversal at the GP into this huge move. Now, on this pullback, that video I came out with last week, excuse me, came out last week with a market red flag, and that is where the market bounced from. So if we had to redraw this trend line, but ultimately you backtest it every single wick still works, every single bounce still works. And where are we at now? So we are very close to new all-time high. Actually, I wasn't paying attention to this yesterday. We almost reached new all-time high yesterday. So new all-time high is 4719.4. Yesterday we got to 4715.6. 4 points, less than 4 points off. Today early on, from the pre-market, actually half hour before pre-market, the bearish pressure started showing up. So now the 30-minute trend is in bearish favor. If we do look at the 30 minutes, this was ultimately a lower high, higher low, higher high, but now we are seeing a higher low, lower high, and potentially a lower low coming. So this brings that to just a quick reminder for you guys that, hey, morning miner, I love how you kept your word. You showed up again. Hey, nice to see you. Thanks for keeping me company last week, by the way. All right, so SPX weekly. This is a quick reminder that it is OPEX week, and generally, and by generally I mean more than 50% of the time, just ever so slightly more than 50% of the time, nothing crazy like 80% or 90%, but majority of the time it is bearish on OPEX week. So when we look at these candles, there is still a chance for this week to become bearish. Now ultimately, if we're to turn bearish today, that might actually be a good sign for the bulls, because what we're thinking here, for those of you that watch the market red flag video, if we're to make a new high, there is a chance for bearish divergence. That will be the real concern for the market. But what we're seeing here, we did get 3.8 points. We'll just call it 4 points off of the all-time high. And if we're to reject from today, ultimately there is no bearish divergence. So watch out for what the action looks like today. If we're to make new all-time high, reject going into Thursday, Friday, and make the weekly candle Reddit bearish, that would be the real concern for the bulls. As for ticker wise, I got a few tickers prepped today that, well, put it this way, I got an ETF prepped today that we haven't looked at in a long time and used to be our favorite ETF. Time to bring it back. Time to bring back our old favorites. And the reason why I say that is based on this QQQIWM chart that we had discussed. Good morning, Anno. Again, apologize if I'm pronouncing your name incorrectly. Tesla chart, of course we will. Tesla is on the always daily looked at chart. Okay, let's discuss QQQIWM first. So this is what we were talking about before, potential ABC, and we did see that A play out. And this is when we drew the ABC that with a B back test of the GP to that lower trend line, which it actually played out. And then essentially now the C could be negated. We are seeing a hold of that GP, and in the last video I did discuss that if we're to see a break over this key support trend, key support resistance, there is an increased chance that the C will not be playing out. And as of yesterday, we did see a close above that support resistance. Ultimately, we are right about here. So depending on, again, this is a QQQ over IWM, so the chart is not going to be to the point on spot like some of the individual tickers are going to be. So you could argue that the support resistance is right here, meaning yesterday was a close right on it. Regardless, pre-market is over it, so we are keeping a close eye on this for this week. If this were to get over, personally I think it's over already, meaning QQQ could remain stronger versus Russ going forward. Now with that being said, hey, I like your ticker request. Those are actually a lot of the tickers that I am going to cover. So let's get into, let me show you guys something first before we get into the tickers. First one, let's take a look at the FANG. So this is this ticker specifically is FNGU. You may not be aware of this, but this was our favorite ticker to trade and hold back when I first discovered it. I think it was in February. Wish I discovered it earlier. So this essentially was a FANG index 3 times leverage ETF, and you know how we only trade 3 times leveraged. So this is a 3 times leverage bull ETF on FANG. Now let's take a look at this chart. When we first discovered it back February, not 2020, I wish it was 2020, February, oh no, it was a little bit earlier actually. It was end of last year somewhere. Anyways, so look at this chart. The pandemic low brought it to 2.3. It is currently trading at 47. That is a 20 time over return. Okay, amazing chart. And it's the FANGs. It's based on the FANGs. You know, can you go wrong? Chances are a little bit less likely, right? So it is 3 times leverage, meaning it is increased risk. But comparing to some of you trading options out there, this is gonna be nothing. 3 times leveraged, bulls, FANGs, hell yeah. Now the reason why I'm bringing this back up is I was looking at this last night, couldn't sleep last night, so looking at the charts. The true traders life. Yeah, so looking at the charts yesterday, and this was a new all-time high zone. I have not looked at this in a long time. Look at this. Okay, so we were going sideways for, I guess, ultimately a new channel potential. Let's see how this plays out. No, not really. It's more so a wedge. I will leave that there for now. You look at the upper trend line, there's triple rejection, right? So this is previous all-time high. We did reject the last time we got over around there, October, end of October, and now we did break bull. Immediate back test of that previous all-time high, and we are seeing continuation. Damn, we're seeing a gap up. So we are a few days late to this move, but I do believe that, especially with the QQQIWM chart the way it's looking now, I do believe there is going to be increased chances that this will continue to see new all-time high in the coming days. Very excited for this. So the plan for this is I'm not going to be actively trading it this time, because that was the regret last time. Actively traded when I first discovered it, want to get used to the stock kind of thing. But imagine, if you just held it, and then we won't even call the bottom. Let's say, somewhere here. Look at that move, 75%. Hell, Right. So I was thinking about this late night last night. Upon the next, if there's anything next big opportunity such as this that's happening, we gotta discover that triple leverage ETF early on, and then just put some money into it, buy and hold kind of thing. Look at this baby, holy shit, 20 times. Excuse my language. Anyways, so the plan is, personally, I will be trading and holding a portion. Before we get into the details of that trade, I wanted to show you guys what this consists of. So this is only 10 holdings in this. I believe it was, if I remember correctly, it's 10. Yeah, 10 holdings in this ETF. Okay, there is Twitter, Tesla, Apple, Facebook, Google, Baba, Netflix, Amazon, Baidu, Nvidia. So we covered majority of these tickers on our daily videos. Tesla, obviously, Apple we cover as well, but it's been a while since we covered it. Baba, I've been talking about, keep your eyes on the China stocks. So Baba, Baidu is already covered. We will go over them very shortly here. Amazon, it is on top watch, and this is why I thought about this ETF again last night, because I like the way the charts are looking for Tesla, Apple, Baba, Amazon. 1, 2, 3, 4. I think Google is always it's been on an uptrend. So that's like 5, 5 out of the 10. That's good enough for me. But let's get into the individual tickers. What do you guys want to see? You guys want to see, does this ETF also have decay? Of course it does. It's leveraged. But the reason why I'm bringing it to you guys' attention, if you think about your decay on a triple leverage ETF, it is gonna be nothing comparing to option calls, option and puts, whatever option you're playing. The decay, it's ultimately, that's only if the underlying assets are going sideways. You will see minor decay. One good comparison would probably be what's the okay, let's do a quick comparison just for you guys. The decay, what Miner is talking about. So this is a RUS chart, and in comparison to the TNA chart, which is a triple leverage of RUS Bull. Now, if you were to look at this, how can we make this better? And the chart stuck. Ooh, I really don't like that. Let's clean up the chart. Make it a line chart. Right, so you can see that, as we all know, the RUS has been going sideways for a long time. So this being a triple leverage, every time RUS moves, the ETF is going to move triple the size. But ultimately, because it's, actually, let's do a monthly chart. Might look better. If you look at the monthly chart, while this, which one's which? RUS is going sideways. The ETF was slightly going down. From here, so if we're to measure from this line to here, was sideways of 0.39% gain. If we're to measure from here, 3 times of that, it should be 1% loss. But ultimately, it was a 7% loss on the ETF due to the decay over 7 months. So, minus the 1% from the underlying asset move itself, it's a 6% decay over 7 months. I would say that is what is that word? What was that word I'm thinking of? Minimal. irrelevant, I would say. Come on. Okay, there we go. All right, so let's get back to the individual tickers. Twitter. I think most of you want to see Tesla, so let's cover Tesla first. Oh, so this has worked out, almost worked out. So essentially the bounce was a lot faster. So we should be looking at, now we're going to be watching, today's gap up. I don't really like today's gap up. So Tesla was a very nice bounce, and day before I played the bounce, just so slightly. Didn't really wanna. What was the day before? So yesterday was Tuesday. Day before was Monday. Oh, that's why. I wasn't feeling well on Monday, so I mainly focused on taking profits. I did do a scalp on Tesla and made just lunch money, but the day ultimately from the profit takings, it was a good day. Really felt like shit that day, so didn't do many trading, and this ultimately was a bounce, because if you look at this on the hourly, and this is what I was playing off of, gap down, was this Monday? 15, 16, yeah, so this is Monday. Gap down on this first, I was looking at 30 minutes. Yeah. So on this first gap down sell off, there was a potential for a bounce here, but didn't want to play this one because I was waiting for that hourly 30-minute bull divergence and needed to lose that 987.88. Ultimately, we got to 978, and the bounce took a while to play out. So ultimately, all I did was bounce from near the bottom here to near that 30-minute 8. As soon as I saw this wick start forming, I get the F out. But ultimately, it took till noonish for that bounce to actually begin. So with Tesla, the concern now is the gap up after minimal. Again, I really need to Google that word. After small amounts of bull volume, decent price action, but now we're gapping up into that 88. So it's a little bit concerning. We're gonna have to watch for what their action looks like early on today. I am already seeing pre-market early action of selling off. So if we're to look at the extended hours, you see how it's already selling off a little bit here. So that's a little bit of a concern, but we're gonna have to watch. Again, same as usual. Wait for the open. Give it 30 minutes. Give it an hour. If the early signs is selling pressure straight from that 88, if you're in the position, I'll probably get out. Ultimately, this is what I'm anticipating. We do need that back test. There is a gap to be filled back here on Tesla. Hey, I think this is the highest concurrent viewers we've had. Hey, thank you guys for watching. We got 4 viewers right now. Wow, I'm excited over 4. Thank you guys. Minor, nice hunch, minimal, kind of HS. Head and shoulders. Are we talking Tesla? Anyway, so that's Tesla on the first one, and let's take a look. We're gonna speed it up a little bit. Go over this 10 tickers. Apple. Now, I really like the Apple chart. I am planning on getting into a trade today on Apple, but probably gonna start with comments. So this chart looks a bit choppy, but to me it looks a little bit more accumulation. It's controlled, sort of controlled trading. You look at this new all-time high, back test previous all-time high. Where was that? Okay, yeah. So it is right here. So back test previous all-time high. You know, we chopped around a bit. We back tested this previous rising wedge upper trend line as well, and then we are being controlled in this environment again, in this zone again. So today, what I'm looking at is if we're to break over 150, I have my alert marked as 151. Yeah, like that. Today, if we're to break over 151, I will likely enter a first position using excuse me, Still some residuals of flu. I'm thinking using the commons as a starter, or leap near the money, like 155, even 150 in the money kind of thing. But give it 2 months. So that would be the starter position on Apple. And then from there, when we break over 153, that will be the ad. Yeah, so that's the play on Apple. Ultimately, you know, when you look at this chart, just in plain sight, it looks sort of chop. But I do believe this could be accumulation. So that's Apple. Next is Amazon. The top 3 most watched. So Amazon, as some of you know, been scalping this, been playing this, but chart's getting a little bit choppy. Look at all these upper wicks up here. There is short-term trend line somewhere around there. Yeah, so I don't like last 2 days candles. There's upper wicks, but we are still trading over that daily 8. Ultimately, it is a daily bull flag formation, so watch out for Amazon. And this is why I say, you know, could potentially your starter position, depending on how you want to play it, depending on how much risk you want to do, is either going to be, you know, leap year, December, option calls, or individual tickers, or the safest would be, of the 4, the safest would probably be FNGU. And this is why I'm bringing it up to you guys again. So Amazon, ultimately daily bull flag. Once we break over, I currently don't have a position, but we'll be looking at getting back in. I wanted to see, hey, why don't I have a position? The plan was to re-enter on this support. All right, gonna be looking at that today. So we are seeing a little bit of a gap up while the market's gapping down, but NASDAQ is gapping up. Interesting. So Amazon, keep it on your top watch, especially on the break of this upper trend line. That should see an explosive move coming up. Remember, it is a double fake out pattern. Breakdown, fake out, breakout, fake out, GP hold, double GP hold, and now we're seeing daily higher high, daily higher low. Daily trend has been changed, new all-time high, long-term sideways consolidation. Now, just as an example to show you guys what we could be looking at for the explosive move, long-term consolidation, breakout, fake out, breakdown, fake out, new high, GP hold, and look at this move since 128% NVIDIA. NVIDIA is, would consider a blue chip as well, so it's very, very reasonable comparison comparing to Amazon. I mean, Amazon ultimately is a lot bigger, larger cap, but this is what I'm anticipating. Something similar, maybe not 128, but at the very minimal, you know, I'll be looking at 30% ultimately. Amazon, keep a foot in the door. Actually, today I might just buy some common shares. At least keep a foot in the door. Yeah, so that's Amazon. Next one. Oh, still taking too much time. Facebook, Google, Baba, Netflix. Actually, let's cover Netflix. Haven't taken a look at Netflix in a while. Bullish trend earning a new all-time high. A little bit of a resistance up ahead at 690. Hey, we did not backtest that GP. So it's not a similar pattern. So we're looking at this potential breakdown, fake out, breakout, fake out, and then backtest the GP. That did not work out. We just continue to go. Netflix, it is still in blue sky. Bull break. Momentum. 1-to-1 extension target all the way at 743. No reason to stop, Baba. Ooh, looking nice for that daily trend reversal. Daily lower low. Nice daily bull divergence here. Very strong daily bull divergence. And now we're seeing a daily higher high. Potential higher low. We're going to need to see that follow through breaking over 182.09 to confirm. And next is Facebook. You want to take a look at Disney? Hey. Morning there. Hey, our new US member. Snap, PLTR. Okay, we'll take a look at those. Facebook, daily trend reversal, daily bull divergence. Oh, these look nice. Daily bull divergence right here. Not as strong as BABA, but it is still daily bull divergence, and we are seeing lower low, higher high, higher low, higher high now. So daily trend has changed on Facebook, looking nice. Blasting through them. Baidu, Nvidia. We already took a look at Nvidia. So Baidu, Facebook, Twitter. I think that's the only 3 left. Baidu, I believe, is gonna look similar to BABA. Oh no, it doesn't have a daily bull divergence. Okay, Baidu does not have a daily bull divergence, but the daily trend has reversed as well with the lower low, higher high, higher low, higher high. And oh nice, we held the GP. So we're gonna same idea with BABA. We're gonna need to see a break over 182.60 for that continuation. And Twitter, it's the only weak chart of the 10 so far. And daily bear flag. Money line's been lost. We have not seen a back test yet. So there's been 1, 2, 3, 4, 5 supports on the money line. I would anticipate a back test, but right now it is a daily bear flag, so we could see lower prices come before a bounce actually comes. Daily's not oversold. 4 hours no longer oversold, so we can see that it's still grinding down here. Slight potential of reversal. Lower part of the key zone could be drawn a little bit lower. I don't really like it. I guess ultimately you're gonna want to see a hold of this price right here. If that is lost, I would anticipate we're going to be coming back down here. So the 1 week of the 9 that we've taken a look at so far, what's the one we're missing? Google. I don't even think we need to take a look at Google. That was the last one. Google. And the reason why I think we don't need to look at Google is, look at that chart. Why? Why would you need to look at it? Don't know why this is over here, but look at that channel still holding strong. Oh my goodness. All-time high. No divergences. Actually, you could argue that this is a bear divergence. So RSI, there is a potential for a trend line over here. You see rejection, rejection, rejection. But to me, I think the chart is cooling off because RSI is cooling off because if you look at the chart, it's still holding up strong. Google, no reason to worry. So that's 9 out of 10 charts on this FNGU that's looking amazing. We'll be taking an entry regardless, even though the chart itself on FNGU looks a little bit extended on the weekly. So if you look at, oh, this chart is messy. Delete. Let me clean this up. Bear with me. Oh, you didn't get to the GP. Yeah, so if you look on the weekly, it is a little bit extended, but it is forming that weekly bull divergence with nice lower wicks forming. Keep your eyes, or at least keep a foot in FNGU. Monthly, a little bit extended as well. Look at this beautiful monthly bull flag. Now we're confirming in new all-time highs. Anyways, so that's the FNGU that I wanted to bring to you guys' attention. Perfect timing, half an hour. Let's take a look at our newest trial member. There on his request, Snap. What's Snap doing? Oh. Well, it's been a long time since I've taken a look at Snap. So ultimately, this was the money line, which is chopping around. We did lose it, back testing, rejected here, and now we're back testing again. I do like how rejection was not that strong. Oh, so close to get that bullish divergence. Wanted to see new low here. So with this, ultimately we are trading over that 88. You could consider first entry, easy stop at least, you know, easy stop just right down here. So the risk is self depending on what you're doing, calls, options. I wouldn't really do calls on this particular move until, so that's a 7%, that's still relatively risky. I wouldn't really consider calls on this move until we are either over the money line for that starter option call entry, until adding with the break over here, 60.78. And what is that move? You need about 10% move. So give it some time, because once we break over the 60.78, we're looking at gap fill potential. Whew, that is gonna be a beauty. 21.57% potential. So first thing to get over, we already got over that first thing, which is 88, which is good. We're still holding it. You're seeing lower wicks coming in. Okay, good to have a starter lower risk kind of lots of time options if you're thinking options. If not, then probably common shares kind of thing. And then second position would be adding trading over this money line, and then third would be on the ad of breaking above 60.78. So that's snap. Next is, actually, let me draw some key zones on here. There's two very clear zones. You can see lots of supports and rejections down here, and then I can see lots of price action up here as well. So it would be, depending on how big you want to make it, I think right here would be safe. You can probably go a little bit lower. Yeah. Hey, would you look at that? We're getting close to that key zone. All right, so that's snap. Next is PLTR. So PLTR actually took a small entry yesterday. Oh crap, there's another ticker we got to cover. PLTR, I took a small entry yesterday, and it was for more so a portfolio hold kind of thing. And the reason for that is, so we sold one of these 2 days. Yeah, we sold one of these 2 days because we were talking about the potential of a head and shoulders pattern here. Left shoulder, head, right shoulder. And this is the neckline that was must hold. And we did see a gap down sell off on earnings, breaking down below that neckline, so which was the concern I had. But the good thing is, you know, we give it a few days and we saw a lack of follow through. So I was taking a look at the shorter time frames and realized that there is a shorter time frame of a trend line down here. And yesterday I wanted to see what if we hold. We did lose it a little bit, was immediately bought up. So I took a position as we were buying it up, holding this trend line. So 1, 2, 3 bounces on this already. Now ultimately what I want to see is immediate follow through, and I want to see a breaking over this 20, a close over 23.43 ish. What is this? 23.41 ish. So I want to see a close over that today on the hourly candle. If not, the stop will be below. This is just common shares, so the stop will be below yesterday's low, 22.62. Because if we were to lose this trend line, this lower trend line, we could be seeing more downsides to come. The original re-entry that I had is around $21, around where this GP bounce was. And if that is lost, well, stop will be right below 20. If that is lost, we could be looking down at 17. So there's lots of downside to come. So just make sure you have your stops ready on this ticker. Okay, as of right now, short-term wise, having my stop below yesterday's low, and then we'll retry at 20 and stop below 20. And if that doesn't work, we'll retry at 17. Those will be the 3 zones, but ultimately right now it is still in that head and shoulders pattern with a break under the neckline and daily bear flag formation. Volume wise, nothing exciting. Low bull, low bear. Chart's cooling off. Next is ATVI. Yeah, not many people requested ATVI before. Let's take a look at it. Ooh. Saw some bullish action and then it broke down. What happened yesterday? Oh. Oh, okay, now I remember. So we were talking about this. It's debate. I had a tough time debating. Excuse me. Debating to play the option calls on either ATVI or Zoom, but I like Zoom better because it did have that daily bull divergence, and ATVI, you know, there's still some, I don't know if they're out of their what do you call it, negative news area yet, so decided to go with Zoom. And ATVI is not long after I shared that trade and that reasoning behind the trade, the stock midday, yeah, it was midday, 8:30, started tanking like crazy. So this I think let's see what the news was. I think it's the harassment is still not over. I wonder if you guys can see this. Okay, so for those of you that don't know, there we go. On the side of TradingView here, you know, the first one is your watch list, and if you click on the third one, there will be news. 16th. I think it might be this one. No, that's a little bit later. This was 8:30. It's gotta be that. So news, ultimately this TradingView probably got the news a little bit later, but this is likely the cause of it. Misconduct, back CEO. CEO knew about the alleged sexual misconduct. Yeah, so still the same news that's going around. That is still affecting the company. So good thing we didn't trade that. Okay, so that's ATVI. Let the dust settle before touching this ticker. Now it's back to that daily bearish. Yeah, daily bear flag formation with huge bear volume. Trading down below that trend line again. Huge red flag. Will not be touching until, let's watch for what the reaction looks like. Actually, let's set an alert at this key zone. See if there's going to be reaction around there. Hey, there's a bit bullish divergence. No. Yeah, we're going to need to lose this low, and then there maybe is going to be a daily bullish divergence. Nothing other than that, nothing too interesting. Disney. Market's looking flat right now. Lots of lower wicks on Russ. Hey, Zoom is gapping up. Very, very minimal. Oh, Lucid, come on. Baba gapping up. Oh, sorry, not Boeing gapping up. Very interesting. Would have anticipated a gap fill at least. Okay, so Disney. Yeah, we're near that key zone. Whoa, chart looks weak. We're filling this gap from way back here. Wow. Look at this. I need to clean the chart up a little bit. But yeah, look at this. I don't know if any of you remember what happened here. This is like one of the, I think they came out, this was the announcement of Disney Plus, if I remember correctly. Disney Plus. Disney Plus. Gap up, buying, and then held. Ultimately, it tried filling the gap, but the bullish pressure was too strong. Never came back to fill it, and now it looks like we're coming back to fill it. The fill would be 157.46. 157. Ooh, 20 cents off. Decreasing bear pressure. Money line's been lost. Wow, look at that perfect rejection. Well, depending on how you draw it. So I might have to redraw the money line here. Yeah, I like that better. And again, the reason why we redraw it to here is, you know, same idea as huge red candle up there. We generally don't use that due to line chart perspective. Huge green candle down here, you could not use that. Generally don't use that, and instead using a line chart. So if you look at the line chart, makes sense, right? So we're using the red candle instead, and to the bottom, second point, and look at that perfect bounce. And from here, gap down, almost gap fill. Make an alert. What was it? 157.46. 157.45. Good enough. So the top of the key zone. Let's watch for this. Still continuing pressure. Is there a bounce to be played here? Bounce play is already over on the earnings. Continue bear pressure. Low bull volume. 4 hours, not exactly. I wouldn't really call that oversold. Oh, there was the second bounce play. Missed it at 2. Okay, so second bounce play, you look for the bullish divergence. First bounce place is always going to be that gap down, but be patient on the whether it's going to be continued selling before the bounce. So with this, there is a new low over here. Obviously, looking at it from the future, it's always easy. You can just say, oh, this was going to be the low. But ultimately, what I'd be looking at, this was the previous low to make it easier. And upon the new low, generally I'd be looking at 5 to 15 minute charts if I was looking to play an oversold bounce. So upon the new low, oh, this might have faked me out. Because this would have been a bullish divergence from the perspective of at this point as well. There will be a bounce, so this bounce might have faked me out, but ultimately you see a 15-minute reject. That is the GTFO sign, and there we go. That's the reversal hammer sign. And was there bullish divergence? No, not really. Oh, what a gap to play. But the chart on the daily still looks weak. Would not be playing it at least until that gap fill. I can see this going back up a little bit before coming back down again. So there is a potential for the chart to play out like, so it's inside bar yesterday, break bullish, reject from there before coming back down to gap fill. So that's Disney. Put wall and call wall works. I do think that put call and call wall does dictate, well, it doesn't really dictate price action, but it does dictate, restrict where the prices are going to move to. So that's partly why we use in the chat, sometimes I will share, especially on OPEX day. And hey, by the way, we have a new video on Friday. Just scheduled it For those of you that haven't seen yet, Friday morning, same time as usual, 6:30 Mountain Standard Time, and that will be covering Friday lottos. I figure this Friday will be the perfect week to start it, because OPEX week, you know, generally increased volatility. Keep your eyes out for that. Minor. Second live of the week, you know, something I hope you are looking forward to. And what is it? Where did it go? Yeah, so this is why sometimes I share this with our trading chat group. You know, these are basically the put call walls on, what am I looking at? SPX, right? And the price will generally be pinned in between two kind of thing, and especially on OPEX, especially right before expiry. And the reason for that is, you know, market makers don't want to pay out as much, right? Just simple as that. Just simple as that. So if we're looking at, you know, this Friday, for example, it's actually a good time to check it. Yeah, this Friday max paying right now, it's sitting at 4,500 and 45. Really, that is low. What's the market at right now? 40. What? Okay, I don't know if this is gonna be accurate this time. Then max paying is sitting at 4,500. That is a huge drop right here. Wow. Yeah, I don't know about that, but that's just something to keep in the back of your mind. You know, when it's off by this much, max paying versus the current stock price. Sometimes when it's off by that much, it's just have it in the back of your head kind of thing. Understand that there could be bearish pressure that's coming in for the rest of the week, but play the charts as they play out. Max paying, to my experience, is not a guarantee money. Okay, and Tesla forming a cup handle. That's gonna yeah, it could be. It's gonna take some time to play out though. Bigger pick. Are we looking at weekly, monthly? No. You're talking about over here, right? Yeah, so we're gonna need to give it some time to play out first. Still a little bit too early to tell. Oh, inverse head and shoulder. That's what you're talking about. Apple. Inverse head and shoulders on Apple. You could say there's an inverse head and shoulders, but that's already, we're gonna need to see follow through kind of thing. So I would say, you know, 4-hour inverse head and shoulders, left shoulder, head, right shoulders, neckline already broken. Oh, nope, neckline right here. So as we broke the neckline, we saw a huge bull move. But as the way it stands right now, I don't see an inverse head and shoulders. So with the inverse head and shoulders and head and shoulders, you need that neckline to be in the trend that needs to be reversed. Okay, that's a bit confusing. Just remember, inverse head and shoulders is while the trend is in bearish, so that neckline needs to be bearish. Head and shoulders is while the trend is bullish, so the neckline needs to be bullish. So with this, this makes sense. But right here, I don't see the left shoulder because the trend is already bullish. Yeah. $720. Okay. Tesla. I think that's about it that I wanted to cover today. Just a quick reminder, make sure to keep BA on your watch. Very interesting. Ooh, damn. I was looking for that gap fill, had the alert set on the gap fill. Didn't see that we actually did a back test of this short-term trend line. Come on. Gap up. I want to see a back test of... Ideally, I want to see... Okay, so we are still a little bit extended on the daily. Ideally, I want to see a back test of here. Now, who was it? This one. Good evening, ladies and gents. Welcome to another Caesar. Caesar, I hope you got out at least with some profit with your BA call. Especially if you're playing weeklies, you know, always my personal trading style is I will always take half on 100%. Okay, you know, it might minimize your returns, but regardless, it reduces that risk. And especially depending on where the chart is at, a lot of times it does work out for it. Just to give you an example, one of the options calls we played in the trading community is we entered a call on Thursday, right? Yeah, Thursday on CGC, and we saw very nice gap up continuation. Friday, another gap up continuation. I sold right here. Okay, and then part of the reason is, well, two reasons. One is it was at 100%. Second, it was at the top of key zone, so I didn't care that the momentum looks strong. We are extended from a daily. Sold half of it, 100% right here. Huge bearish pressure right after that. Okay, always make sure you sell 100% at. Ideally sell half at 100%. That will ensure you a free ride. Not to mention if it's weeklies, I would, you know, on weeklies with BA is a little bit different because you're looking at this on yesterday's chart. That first 30-minute candle is already a warning sign. Losing that 30-minute 8 is another warning sign. Already 8 being lost, that is the GTFO sign. You know, you could wait for the bounce like this. There's always going to be a bounce, okay? Just a matter of when. So, personal preference, I would get the AF out at the already 8, the loss of already 8, or even 30-minute 8, because I don't usually watch the already chart. And from here, you see already 8 reject. So it's very interesting we're seeing a gap up today, but let's see what that first 30-minute looks like. I would anticipate ultimately either inside bar kind of day, but yesterday is a dark cloud covering, so I would anticipate out longer term we should see that gap fill. Alert remains there. We'll be on top watch with BA. Right, so that's it for today's video. Hope you guys enjoyed the content. Thank you for watching. Thank you for all your support. Thank you, Miner. Thank you, Darren. Thank you, Anil, new viewer. Thank you guys for joining me in our Wednesday morning live. And quick reminder, don't forget Friday, new video series. We'll be looking at Friday lottos, OPEX week. Exciting times. Time to either make some really good money or lose your lunch. Not what I promote generally, especially in the trading community. I don't usually post my lotto trades, but just something for, I know some of you really like lotto trades. So the other thing, 250 subs, there will be a giveaway contest. Keep an eye out for that. Thank you for watching. I will see you in the next video.